If you're looking to buy your first home, it's important to have an understanding of fixed rate mortgages. In this video, we're going to look at how fixed rate mortgages work, compare them with variable rate and tracker rate options to help you make an informed decision. We'll answer the top 10 questions that our clients typically ask us when we're looking at fixed rate mortgages. What is a fixed rate mortgage and how does it work? A fixed rate mortgage provides a constant interest rate for a predetermined period, typically 2, 3, 5 or 10 years. This ensures that your monthly payments remain unchanged during this term. It provides financial predictability, and for first-time buyers especially, this provides stability, simplifies budgeting and shields you from potential interest rate increases. How do fixed rate mortgages compare to tracker rate mortgages? Fixed rate mortgages offer consistent monthly payments, which makes it a lot easier to budget. In contrast, tracker rate mortgages follow the Bank of England base rate, meaning that payments can vary. While fixed rates provide certainty, tracker rates might offer a lower initial rate, but come with the risk of future increases. Fixed rates are also less flexible, as you are most likely tied to that lender with penalties if you want to exit the agreement. How much deposit do I need for a fixed rate mortgage as a first-time buyer? The required deposit typically ranges from 5 to 25% of the property's purchase price, and that depends on the property type, the loan amount, your credit score, and features such as interest only that you might want to add. Larger deposits can secure more favourable interest rates as it reduces the loan to value ratio, which represents a lower risk to the lender. How long should I fix my mortgage rate as a first-time buyer? The ideal fixed rate term depends on you and your plans for the future, as well as the outlook on interest rates. Shorter terms, say 2 to 3 years, give better flexibility but require you to remortgage sooner, whereas longer terms like 5 or 10 years provide extended stability but commit you to a longer period, with early repayment charges if you exit the deal prematurely. It's important to assess your future plans, such as any moves or income changes, to determine what is going to be most suitable for you. What are the advantages of fixed rate mortgages for first-time buyers? Well, firstly, you have predictable payments, so fixed monthly payments make it much easier to budget. You know exactly what's going to be going out each month. And the second is protection against rate increases. So regardless of what happens with interest rates in the wider world, your rate is secured and will not change. What are the disadvantages of fixed rate mortgages for first-time buyers? Firstly, you've got higher interest rates. You might find the initial rate is higher on a fixed rate than you would get with a variable equivalent. Next up, we have limited flexibility. So you have early repayment charges if you want to switch the deal or repay the loan within that fixed rate term. And thirdly, you've got missed opportunities. So if the market changes and interest rates fall, you won't benefit from lower interest rate during your fixed rate period. How does my credit score affect the fixed rate mortgage rates I can apply for? Well, a higher credit score typically means that you qualify for more favourable rates, as it indicates a lower risk to the lender. Conversely, if you have a lower credit score, you might find that you have limited options in terms of lenders and therefore higher interest rates that would apply. Can I overpay on a fixed rate mortgage without penalty? So most lenders allow overpayments of up to 10% of the loan balance each year without any penalties. If you go over that limit, you might trigger the early repayment charges. Some lenders will actually go up to 20% overpayment allowance, so if you're thinking of making larger sum overpayments, then that might be worth exploring. What are the fees associated with the fixed rate mortgages for first-time buyers? Associated fees might include things like arrangement fees, so the charge from the lender for setting up your mortgage, usually between £1,000 and £1,500. You also have valuation fees, so for assessing the property's value, the lender may charge. A lot of them do it for free, but some there will be a fee involved. What happens after the fixed rate period ends on my mortgage? Well, once the fixed rate period is concluded, the mortgage typically reverts to the lender's standard variable rate, or SVR, which is most likely going to be higher than the rate you're paying. To maintain favourable rates, you'll need to remortgage onto a new fixed rate deal before your current term ends. You can do this up to 6 months before the current deal ends, so plenty of time to get in there. So those are the answers to the top 10 questions we most frequently hear about fixed rate mortgages for first-time buyers. Hopefully you found the video useful.